The world is going through big changes and things can be pretty scary. There's a lot of uncertainty with things like house prices and cost of living. Some people are feeling really uneasy about what to do next. Therefore, we need to be financially prepared for rough times. In today's video, I'm going to share Warren Buffett 5 rules you need to know for successful investing in today's economy. I will teach you how to find a good value stock, how to buy stocks with a margin of safety, and how to never lose money. Keep watching. By the end of this video you will learn all of this. You don't need to be an economist to know that a recession can cause problems. The last big one was in 2007 to 2009, and if you've already been through it, then you'll already have a fair idea of how bad it will be. Generally, recessions cause unemployment to surge and stock markets to dip. The world is living through uncertain times, as income and spending are struggling to prices have been skyrocketing. The Federal Reserve has tried to reduce prices, but it's been hard. What happens during a recession? Even though the economy is not doing well right now and bills are increasing, it can get worse. People may have to make difficult decisions such as not paying rent in order to buy food for their families. And when things get worse, you get a recession. The National Bureau of Economic Research defines a recession as a significant decline in economic activity that is spread across the economy and that lasts more than a few months. The recession in 2008 was a perfect example. The stock market crashed, the US suffered one of its worst recessions since World War II, and the unemployment rate rose from 4% to 10%. A recession is usually caused by an economic downturn or an external shock like a financial crisis or war. With the economy still depressed now and no sign of turning around anytime soon, we're well overdue for another one. You need to be financially prepared for rough times because you're going to want to hang on to your horses. It's about to get real. I want you to be empowered in this challenging time ahead, and I want to provide you with the tools and guidelines to make it easier. The reason I feel like I'm able to do that is because this ain't my first recession. I've been there before. When this happened, I had just finished studying thinking about jobs. There was a recession. It was the 2008 recession. Everything was crashing and I was looking for jobs in marketing, and then this was happening. I was very nervous. I was pretty naive. I didn't actually know what a recession meant for me, and I was lucky enough to not really have any debt. Imagine having a student loan debt which nobody cared about. So bearing in mind, recessions happen, they come and go. All you want to be able to do is kind of weather and hang on through the storm. It is, therefore, beneficial to learn these 5 rules of Warren Buffett, as they help you keep your money safe by investing it in a more sustainable way. If you ever been in a recession before, comment below because I'd love to hear your thoughts. With that being said, who is Warren Buffett? Warren Buffett is an American investor, a highly successful investor and philanthropist. He is worth over $100 billion and has been a business tycoon for decades. Many people consider Warren Buffett to be the world's best investor, with a net worth of billions. Investing $1,000 in Berkshire Hathaway when it was created would make you worth an estimated $30 million. Buffett gives many interviews on how he did it. He understands most people haven't, and sticks to just a few key principles to invest. In this video, you will find all of these lessons, so that you can become one of those people who will be able to generate wealth in the stock market in this challenging economy, applying these rules when investing. What is important for you to know? Buffett is a legendary investor who has been investing in stocks since the 1950s. His investment strategy is based on long-term investments, which means that he doesn't trade often and he doesn't try to predict the market. He focuses on buying good companies at a reasonable price with a margin of safety. When learning how to invest, it is important to learn from the best, but it also pays to learn from the worst. The following are his 5 rules for successful investing. The first rule of Warren Buffett, 5 rules you need to know to invest successfully in today's economy is this: invest in what you know and never lose money. Investing in what you know is a good idea because it provides you with knowledge about the industry and its competitive landscape. This reduces risk for investors because they are familiar with their investment decision-making process. Because there are 5 common mistakes made by beginners while investing. The first mistake that beginners make is not understanding the basics. This is a problem because you'll be losing money if you don't have a firm grasp on what the market is doing and how to invest in it. The second mistake that beginners make is not diversifying their portfolio. This can lead to them having all of their eggs in one basket and then losing everything if that basket falls. The third mistake that beginners make is thinking they have to be perfect at investing, which leads to them making bad trades or buying stocks just because they think they're hot. The fourth mistake that beginners make is believing in the hype of certain stocks, which can lead to them buying stocks when they're at an all-time high. The final mistake that beginners make is not paying attention to the fundamentals of stocks, which can lead to them investing in companies with bad fundamentals and then losing money when those companies' values plummet. Warren Buffett has made it his philosophy never to lose money. He is a strong believer in the idea of value investing, which means that he invests in stocks that are undervalued. He believes that if you invest in shares at the right price, then you will make money even if the market goes down. He often says, "It is far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Moving on to the next rule, and that is, don't invest in something you don't understand. Buffett's investment philosophy is based on value investing, buying stocks at less than their intrinsic value which are underpriced by the market. This strategy has led to him being called the greatest investor of all time. He is also known for his adherence to value investing principles such as, buy when others are despondently selling, sell when others are greedily buying, and never invest in a business you cannot understand. In fact, he has gone as far as to say that it's better to be approximately right rather than precisely wrong. Buffett's advice to not invest in something you don't understand can be applied to your career as well. If you don't understand what you're doing or why it's important, then it may not be a good idea to invest your time into it. In conclusion, never invest in something that you simply don't understand. There may be underlying risks that can wipe out your investment completely, like these crazy leveraged volatility products. Before I move on to Warren Buffett, next rule, if you're looking to invest in the stock market, I will recommend one of the best online brokers, eToro.com. eToro's platform is intuitive and easy to use even for beginners. I personally use eToro.com. There's a link to sign up in the description box below. By the way, if you're enjoying the tips so far and want more videos like this, hit the like button so I know. Now with that out of the way, let's move on to the next rule of Warren Buffett's 5 rules you need to know for successful investing in today's economy. And that is, have patience and wait for the right opportunity. This advice from Warren Buffett is one that many people find themselves repeating. It encourages patience when it comes to investing in a company or stock. The idea behind the advice is that you should buy stocks when they are below their intrinsic value, and wait until they are at their intrinsic value before selling them. This type of investment strategy can be very profitable if done correctly, but it requires a lot of patience. He said, the time to buy stocks, or anything else,